Hello YouTube, Coin Capital here, and today in this video I'll be discussing silver ETFs. First, what is a silver ETF? Secondly, what is the purpose of having one? And third, how to obtain one. So, a silver ETF is a silver exchange traded fund, which stands for ETF, and it invests primarily in hard silver assets, which are held in trust by the fund manager or custodian, basically the manager that has all the silver. They have the physical silver, and it is established typically as grantor trusts because silver ETFs allows each share represented by the ETF a specific right to particular quantity of silver, usually measured in ounces, but in this case it's a set amount of silver that each share possesses that you technically can own. Now, ETFs allow for greater liquidity than holding the metal itself. That's because they are readily traded and more accessible, which means that you don't have to go out and buy bullion, or you don't have to go and try to sell bullion to people. You can just buy and trade the stock, the ETF. ETFs are much easier to access for an individual than futures markets trading. Another form of trading silver, I'm not going to get into that, but it's much easier if you have an ETF. Also, silver ETFs are designed to track the spot price of silver on the open market as closely as possible. Now, the first silver ETF that was on the market was the iShares Silver Trust, which was managed by Barclays Global Investors and was introduced in 2006. The thing about these silver ETFs is market volatility tends to increase attention and the importance of diversifying investment portfolios, which these ETFs are aimed and help to achieve. Because when a market is undergoing turbulence, precious metals become more attractive to investors because they have a very safe status in hard times for investing. Now, silver ETFs are a good option because silver is in high demand in so many different industries, and these include consumer electronics, automobile manufacturing, solar energy, and housing. Silver is needed for all these industries, which creates a demand for it, as well as diversification. Now, there are actually 13 ETFs traded within U.S. markets, and these silver ETFs gather total assets of about $7.45 billion, so $7.5 billion of physical silver that these ETFs all combine to hold. The average expense ratio is 0.77% for these silver ETFs, and they're found under commodities and equity classes. The largest silver ETF is the iShares Silver Trust with the ticker SLV with $6.05 billion in assets. In the last year, the best performing silver ETF was the SBUG, and the most recent ETF launched was the iPath Silver ETN. Now, what you want to look for ETFs and silver ETFs is the expense ratio. That is the annual fee paid by the holders for the ETF. It's expressed as a percentage of the assets and is deducted during the fiscal year as part of the ETF's fee. You want to look out for this because the higher, the more their fee. Now, for example, if you have the iShares Silver ETF, which charges 0.5% of an annual expense ratio, this means you'll have to pay $5 an annual fee for every $1,000 invested, and that's just using an example. Now, the biggest silver ETFs on the market is the iShares Silver Trust with $5.17 billion in assets, the Global Silver Miners ETF with $411 million in assets, the Velocity Shares Long Silver ETN with $362 million in assets, the ETF's Physical Silver Shares with $328 million in assets, and the AGQ Pro Shares Ultra Silver with $208 million in assets. Now, the way you can obtain a silver ETF is by having an online brokerage account or having a brokerage account in general, and you can buy and trade these during market hours. Anybody with an account can buy and sell silver ETFs, which makes them extremely attractive to investors. I really do appreciate you watching. Make sure to like, comment, subscribe, share this video with your friends, and follow my Instagram. I just created an Instagram account. It's Coin Capital on Instagram. So make sure to drop a follow and leave a like on that. Thank you so much. I'll see you guys in the next video.